for that very warm welcome, Alexandra. We've got a lot to live up to. She's built this up now, Antony. We're under pressure.
We'll do our best.
Hello, ladies and gentlemen, Your Excellencies. My name, as Alexandra said, is Jane Witherspoon. I'm the Bureau Chief for Middle East across the Middle East. And I'm very delighted to be joined by Mr. Antony Jenkins, CBE. Pleasure to have you here.
Thank you. It's great to be here. It's always exciting to be in Dubai.
Yeah, it's hot now as well. It's heating up. Right, let's get straight down to business. As we were saying, ensuring a level playing field, banks versus fintechs. So let's talk about the market landscape, I think, to begin. You know, we've been talking for some time about the impact of fintech upstarts on the banking landscape. How have you seen banks respond, to the rise of fintechs?
So, of course, the banking sector is not homogenous globally, and frankly, neither is fintech. We're sort of 15 years into the start of the fintech revolution. And basically, the notion was you could take modern technology and apply it to a set of financial problems, financial needs that customers had to create better outcomes for those customers. That was the idea. And if you look around the world, from Asia through to the Middle East, Africa, North America, South America, Europe, you can see that there have been many use cases that have been established and been successful in the fintech space, driven by the fintechs. If you think about neobanks in the UK, for example, you think about buy now, pay later, think about low value foreign exchange transactions, all of those things have been massively improved by the fintech community. But equally, the banks have not stayed static. They have responded. In fact, they've had to respond because they've had to up their game. The one good thing about fintechs is they operate much better user experiences than the traditional incumbents. And what that's done is forced the incumbents to raise their game. So I think we're now at this very exciting inflection point where we've seen a lot of momentum building in the fintech sector, the incumbents responding, and the big question is, where does it all go from here?
Well, we're 15 years in. Are we at the beginning of the end or the end of the beginning of fintech when you talk about time frame?
That's the question that is really on my mind at the moment. And I'm undecided because I can see two different ways forward from here. I can see a sort of new equilibrium that we've reached where they continue to improve their offers, and the fintechs continue to do what they do. Some will survive, some won't. As you know, there's been a big rise also in the fintech space in B2B and B2B solutions. That's what we do in 10x, for example. We help the banks compete in this new world. And you could see that sort of equilibrium maintaining in many ways. Other technologies coming to the fore, like artificial intelligence, are no doubt going to, in some ways, help that equilibrium to sustain because banks can now deploy AI for things like customer service, writing code, testing, and so on. So that's one version of the world. It's like today, but slightly better. If I use another analogy, I'm very old, and I can remember when people used to go to the movies a lot. And then it became that you could rent videos, and that was better because you could go down to the video store on a Friday night and rent a video. And I think that's kind of where we are now. The big question in my mind is, are we going to see a jump in financial services, the equivalent of moving from movie theater to video store to streaming? And what would that look like? That would look like a massive democratization of the financial system. It would mean that products are provided instantly, provided at much lower cost, that credit's more widely available and provided more responsibly and accurately, using some of the technologies that are at our disposal. And I think there's some real benefits here that we shouldn't sort of glide over. There are benefits, obviously, for the consumer of financial services, and that's true whether you're an individual, a small business, or a company. But it's also benefits for the banks as well, because the ones that can lead in these technologies can add market share. But I think most importantly, there are massive benefits when you streamline the financial system for societies and economies. And we can see that in places like Kenya with M-Pesa. We can see it in India with all the work that's been done there with payments. So I think there's this second world that I can see, and it's the one I really hope we find ourselves in, because it could really power the economy through the middle and end of this 21st century.
You touched on their customer experience, technology, and innovation, which are all equally important. But, fintechs on average tend to offer a superior customer experience to that of the mainstream banks, well, at least digitally. Do you think that banks will always be behind? What can they do to catch up?
I think it's very difficult for banks because not only are they dealing with technology that's very old. I sometimes refer to banks unkindly as museums of technology because they have every generation of hardware and software in there, literally sometimes going back to the 60s and 70s. Mainframes and then mid-range and servers and so on. So that in itself is an impediment to moving forward and delivering these experiences because all those systems were basically designed to operate in batch as opposed to in real time. They don't use modern technology, they're very inflexible. But equally, the other challenge for banks, of course, is the culture inside the bank and the bank's ways of operating and ways of working. Many banks today operate in what we call waterfall, which is basically a very linear, progressive way of operating. It means that you have to conceive of something now and it gets delivered in 9 or 12 months down the road. And of course, you always get it slightly wrong. And for fintechs, they work in a way that's called agile. So they're literally working a month or two in advance. So if they get it wrong, it doesn't matter because they can fix it the next month. So I think there are some inherent disadvantages for the incumbents. And again, what we're trying to do in my company is give the incumbents the tools so that they can catch up and remain competitive and remain relevant for their customers, but also for their shareholders.
How are you actually doing that and implementing it? You've got an ambitious goal of making banking 10 times better. Practically, how are you achieving that?
Yeah, no, it's a great question. And as you know, I spent a long time in the financial services industry and was grappling with a lot of these challenges that we're discussing today. And when I left the industry in 2015, I just couldn't get out of my head the idea that there had to be a better way to do these things. And underpinning this, literally, I sat down with a clean piece of paper and said, okay, what would it look like to make banking 10 times better? And we defined it as being better for the customer, better for the bank, better for society. And there were two big ideas that underpinned the work that we do, and there's still those ideas 8 years later. The first was that we design the platform. When people think about software as something sort of ethereal and kind of out there in the ether, it's not. It's actually a physical thing. Code is physical. It's ones and zeros. It sits on transistors inside servers. This is physical stuff. So we said, okay, rather than do what the industry has done historically, which is to design the technology around products. So here's my checking account offer, here's my savings product, here's my mortgage product, all of which were completely separate physical technology stacks. Let's design it around the customer. So there is no product on our system, there is only the customer as the entity. And then the second thing we said was, if you think about financial services products, they basically do the same sorts of things. You have to make a payment, you have to receive a payment, you have to charge interest or get credited interest. You might want to get some sort of insurance on what you do. For customers, that would be life insurance or property insurance. For companies, it's derivatives and FX hedging. So those 5 things. And then the 6th thing is you want information on the first 5 things. So if you think about those 6 things, rather than build, again, a set of monolithic product software, let's build a set of little tiny pieces of software, we call them microservices, that you can put together like Lego blocks to deliver what looks like a product to the customer. And the advantage to that, of course, is that you can reuse the components over and over again. So that then gives you a massive amount of speed to market, much lower cost, and so on. And so all of those were the sort of ideas. That was the sort of what we wanted to do, and then the how we did it. So we discovered the public cloud. We discovered all the tooling that sits in the public cloud that have been developed by the big tech companies. that allows us to develop and deploy this software much more quickly and more efficiently.
Great stuff. What role do you think, what role do you see banks and fintechs playing in furthering financial inclusion around this region and then more globally?
Yeah, I think again, if you look at the world, there's in the developed world, for example, like the UK, 40% of people have almost no savings at all. So wealth is very stratified, and if you look at the developing world, it's even more stratified. So what you want to be able to do is to create economic activity that allows the creation of wealth, and to do that, what you need to do is have a set of financial services that allow money to move without friction, and that allows product to be provided in a much more efficient way. So if you go, and I think some of the most innovative work around this has been done in the developing world. So if you go to Africa and you look at how microfinance savings groups have operated, and I've seen this in many African countries, the empowerment that creates for people to start a small business and then from that grow that business and then provide for their families and their children. What we don't understand often in the developed world is just how little support is provided in the developing world. You have to do it for yourself. And so the smoother the financial system, the more we can use technology to automate it, the better off we'll be. And this is what I love about, I mentioned it before, the Kenyan example of M-Pesa. M-Pesa, the technology originally for M-Pesa was very, very basic. It was based around SMS. It was based on feature phones, and it wasn't even developed by a bank. It was developed by a telecom. And so that's an interesting insight into, not all good ideas come out of the industry. So for me, I think we can stretch financial inclusion much more broadly, both in the developing world and the developed world. And in many ways, the developing world has this opportunity to leapfrog over the developed world. But even in the UK, there's still 1 to 2 million adults who don't have access to a bank account. They're forced to use cash, and they're forced to deal with all the risk that goes along with that and so on.
It's crazy when you think about it in today's society as well, that you're talking about subjects like that. As the title of this session suggested, I wanted to ask you, how do we ensure a level playing between the banks and the fintechs?
I mean, there are numerous actors involved in this landscape, right? So there's the fintechs themselves, there's the banks themselves, there's regulators, there's governments, and everybody's got their role to play. And I think, we come at it from our own individual interests, but we also have to think collectively about what we're trying to ensure here. So what we want to be able to do is to make sure that fintechs can do their job, which is about primarily access to capital and the ability to grow. We need to make sure that governments and regulators create the environment while they continue to do their jobs that allows these organizations to flourish in a controlled way. And then, of course, we need the banks to, frankly, up their game, but also recognize that this isn't always about competition. It can be about collaboration. As I mentioned, fintech is a very broad category, so we see things that are pure B2C plays that might compete with banks, but there's many B2C and B2B plays, like, again, 10x, which are complementary to what banks are going to do. Of course, banks could transform themselves, but I've spent 8 years and over £500 million doing what I'm doing. Why not just buy what we do from us, and that takes one big job off your plate, and you can focus on all the other things you need to do as a bank, upping that customer experience, improving your returns to shareholders, and so on. So this is about recognizing where our individual roles operate and where we can all up our game, and it's also about recognizing where we can collaborate and work together and partner to drive things forward. And one of the exciting things I always find about being in this part of the world is just how much energy there is and how fast moving, how positive and optimistic people are. And this is a great forum, I think, for bringing together all of these parties so that we can get those ideas on the table and turn them into action. You mentioned there the kind of swing from competitive to collaborative.
Do you have any examples of some of the most successful partnerships that you've seen happen?
Yeah, I mean, it sounds a bit self-serving, but if I think about the work that we're doing in my business, we've supported JP Morgan to launch a bank in the UK. It's a very, very successful launch. They've effectively built their own neobank in the UK. We're doing work with Westpac in Australia that allows them to transform their corporate banking experience. So these are the sorts of use cases. But again, if you look at things like fraud, customer identification and verification, deployment of AI and chatbots, these are all areas where banks are increasingly using third-party tech to advance their agenda. And this is not a new idea. I mean, if you go back to the days of Visa and MasterCard, both of those were actually industry-owned utilities that provided a set of services for banks as the credit card market and debit card markets grew. So this is not a new pattern that banks have to learn, but I do think there is an imperative for banks to deploy these technologies more quickly because the environment is ever more challenging.
Are there any of those technologies that we should be actually keeping a closer eye on as we move into the future and the kind of outlook?
Yeah, so I've got a theory about this, that we tend to get distracted by the sort of bright, shiny objects out there. And the truth of artificial intelligence is that it's been around for 40-odd years, it goes back to Turing and all of that stuff. But when ChatGPT hit the public consciousness, suddenly everything was about AI. And there's an old cliche in the futurism business that we tend to overestimate the impact of things in the short term and underestimate them in the long term. And I think that is exactly what's going on here. What I like to try and do is really understand how the underlying technologies are moving. And I'm always struck when we hit the pandemic how everybody started to work from home. That was great. And we all thought, oh, thank God for Zoom, thank God for Teams. It was very little to do with Zoom or Teams. It was actually to do with the fact that we had broadband into our homes. We put broadband into our homes. We used it in the evenings and weekends, not when we were working. And that allowed us to have all of these high-definition interactions. Somebody was telling me the other day that the power of neural nets, which is the technology that underpins a lot of AI, is doubling roughly every 16 weeks. Now, what that says to me is, we're going to see a whole wave of technology transformation coming. But why is it doubling at that pace? It's doubling at that pace because there is a vast amount of very, very cheap computing available in the world. And that's really what's driving all of this. I don't know about you, I've got thousands of photos on my phone, and I worry about that because I know they're stored on a server somewhere.
Back them up.
Yeah, in the middle of nowhere. And that takes resource. But it's also an example of just how much power there is in the underlying technologies. This is like the difference between man discovering fire and electricity. We're literally in that sort of scale of change. And I think we're going to see, come back to your earlier question about, is it the end of the beginning or the beginning of the end? The reason why I believe this is the end of the beginning is because the underlying power of this technology is going to create a massive amount of transformation.
We have a lot of banking and fintech CEOs in our audience. If you could give them one piece of advice, what would it be?
I say the first thing is be curious, because sometimes people think, that tech stuff, it's for the millennials, or, it's all coders in hoodies. That's not right. We all have to understand how these technologies are moving because the impact on our life is profound. And the second thing I would say is don't expect the world to be linear. It's not linear. It probably never was. But today, things don't move like that. They move like that. And so you have to be ready for that, and you have to be positioning your organizations for that.
Your Excellencies, ladies and gentlemen, please put your hands together and give a big round of applause for Mr. Antony Jenkins.
Thank you. Thank you very much.